It is still so nice to be in front of a crowd. Thank you all for dedicating your valuable time being here today. Thank you, John, for dedicating your incredibly valuable time as a value investor in this volatile moment with all your years of experience. Please, I want some of you actually not looking at us at all. I want you on your phones. I want you sharing some of the thoughts, the leadership coming from John today. Hashtag Bloomberg Invest. Get involved with us on social media as well. And I'm going to have a little poll for you in a minute to get you involved too. But John, every day is extraordinary. And the beginning of the year, we don't need to go through some of the pain trades, trillions lost in global stock markets, the fact that we've had the worst start to the year since some point in the 80s. Are you at the moment, within this volatile time, what do you even think value means right now? How do you define it?
Well, I'm still defining value the way we always have. Trying to find stocks that are selling at low multiples, that are selling at significant discounts to private market value, companies that have strong balance sheets and a strong moat around them. So we're not shifting and adjusting. I know a lot of value managers have shifted to buying, larger cap growth stocks that have been broken. They think they're cheap. But we really are sticking to our tried and true principles, and the value really hasn't changed. And when everyone's getting afraid of value, that's when we think there's real opportunity there.
And sticking to your patient focus, and I know that has been with you since, of course, you started this incredible journey, I think at the age of 24 when you first founded the business in 1983. Extraordinary to have that focus, that drive at that age. Let's just get the focus and the drive from the audience for a second. I want to understand from you whether you still got that patient determination within value stocks. Do you think value stocks, as they're defined, are going to outperform growth stocks, as they did perhaps at the start of this year, but then it's all got a bit hairy? Do you think over the next 6 months, value will outperform growth? Get involved in the poll if you can. The moment I can see, well, actually, most of you do think that value is going to outperform. They're with you, John, I'm pleased to say. Talk to us a little bit, therefore, as the mood of the room seems to be agreeing with you, how you're going to look for those opportunities within this patience when it suddenly feels like things have sold off, things are becoming more attractive, but you're also looking at the world of bonds. Maybe treasuries are suddenly giving some sort of an alternative. How do you seek out which company you think you believe in for the long term?
Well, we really believe in what Warren Buffett always says, that you want to invest within your circle of competence. Invest in companies and industries that you really understand deeply, and you feel like you have an edge there. So that's what we're doing. We're building larger positions in our favorite names. Of course, we're always looking for new ideas and fresh ideas, but often you end up buying more of the things that you truly believe in.
Talk to us about the new ideas, the fresh ideas, the behavioral finance. How do you ensure that when you're not being barraged with emails, because I know you're a man who refuses to have to be responsive in that way, but more be able to be within the reading and the focus? How are you ensuring that you're always stress testing your own ideas?
We're constantly reading as much as possible. We're so excited about Annie Duke's new book about quitting.
Yeah.
And we're hoping to all of us in the research department will read it, hopefully engage with her and learn about the things that she's thought about. Adam Grant's book, Think Again.
Yeah.
These books that force you to think about how you don't get tied into a perspective and are unwilling to change your ideas. And of course, Dick Thaler and Daniel Kahneman and the behavioral finance experts have really taught us that, to be afraid of confirmation bias and making sure that you're willing to look at all ideas and not be locked into what you've always thought. So we think it's so important. The science of behavioral finance, we can't get enough of it, and are constantly looking to see how we can improve and understand each of our weaknesses on our research team.
It's interesting, of course, that you yourself have been the subject of many a book. I'm thinking of David Rubenstein's got a new book out, launched, I think, last month, and you're a focus of the chapter, your ways in which you invest. Why then, at the moment, do you find yourself doubling down in your favorite names, particularly when Madison Square Gardens, you own it, and you also share within your letters to your investors that you're always look, this hasn't performed as we think. We don't, how do you continue to think, okay, but that is the right stock, and I know it will come good in the longer term?
Well, we work with our team. We have an experienced group of people who've been together for a very long time. I was having lunch the other day with Ken Kurt and Tim Feidler, two of our long-term leaders, executive vice presidents, and talking about these industries that we know really well and why it's so important to be building those positions. So right now, Madison Square Garden Entertainment, we think it's selling at over a 70% discount to its private market value. That rarely, if ever has happened at Ariel, where we find names that cheap. The last time was at '08 and '09, at the height of the financial crisis. Maybe you found a few names that were that cheap. Our overall portfolio is selling at about over a 40% discount, one of the largest in our 39-year history. But again, we think Madison Square Garden has this, this iconic property. There's no across the street from the Garden. And as we were talking about it, people want to get back to seeing concerts, seeing teams. And I was talking to the management a couple of weeks ago, and they're saying, the Billy Joel residency is still selling out.
I see the lines.
Yeah, and their new Sphere that they're building in Las Vegas, we've gone and had the Hard Hat Tour. It's a thrilling new entertainment vehicle. It's really exciting, and we think once they get it proved in Las Vegas, they can take that around the world. This is huge new way of people consuming that kind of entertainment.
It was interesting. David Einhorn yesterday did an interview with Sonali Basak, who was just on. He, a hedge fund manager, but a value investor, and was talking about how there are very few of the really focused value investors out there anymore. In fact, he sounded pretty dour. He was saying he didn't know if value investing was ever really going to come back. But he did say no one knows how to value anything anymore. Is that what's going wrong? Why the market has Madison Square Garden's entertainment so deeply discounted? Do we not know how to value assets at the moment?
I think it's a temporary phenomenon. Sometimes markets go crazy. And
are they crazy right now?
We think so. We've never seen this kind of volatility, up and down. All of us here, the ups and downs intraday is something that just never, ever experienced. But I think, volatility should be your friend. It should create opportunities where stocks are being mispriced, research isn't being done well. People become so short-term focused today in our society. So we think those of us that are left that are willing to look out 3-5 years out over the horizon, looking out to see when the storm passes what this company will truly look like, what kind of cash it will be generating. I think that way of value investing is always going to be something that will work in our markets.
We had a guest on, a strategist from a bank, and Barry Bannister was saying we're all forced to be day traders now. Are you forced to in some ways just to know, oh, this is when I want to top up, this is the right value, or are you dollar cost averaging still? Are you still thinking I'm not getting involved in this day-to-day volatility?
Well, again, it creates opportunities. So we're probably trading more than on average when a name that you love a lot is down 5-10% in a week. We're going to be in there adding to that position, having a lower cost for that position. And that's worked for us over these 39 years, whether it was the 1987 crash or, again, the '08 and '09 problems that were so severe, or the COVID crisis. We found that if you're willing to do your homework and buy more of those names that you truly believe in, it works out. So we're doing more trading because there's more opportunity caused by this volatility.
Of course, the '87 crash sort of earned your spurs in many ways. You proved your resilience. Of course, you'd founded in '83. You now have 16 billion thereabouts under management. It showed that you could, with this patient capital, still win out. Is this going to be another one of those moments where people earn their right to be thought of as legendary investors?
I think so. It does take courage to buy when everyone is fearful, and Warren always talks about you want to be greedy when others are fearful. And the great John Templeton used to always say you want to buy when there's maximum pessimism, but it's harder to do. So, for example, another favorite name of ours is Paramount Global.
Yeah.
Well, all morning this morning I'm texting with John Miller from our team about another recommendation from the sell side saying, sell Paramount Global, or numbers are not going to be what you expect. Everyone hates it. And while everyone hates it, that creates opportunity, we think. So we're just going to continue to do its work for us for these last 40 years, even if it has been a very painful 10 months.
What about when everyone loves one of your names? You've been very astute with some of the energy names, I think, or indeed the potash names and fertilizers. I mean, the extraordinary run-up we did see in commodities has come off the boil. But how do you think about when to exit, when you're like, okay, this has been our run?
When stocks get expensive, like we said, we like to find stocks that are selling at over a 40% discount when we buy them. And once a stock is no longer selling at a discount, it's at a premium to the real value of the company, then we start to scale out. Or, of course, if we lose faith in the management team and their ability to create a plan to win for the future, if you start to see that the competitive mode is not as deep as you thought it was, there's going to be reasons to sell. Or if you're questioning the capital allocation decisions of the management team. People are often making acquisitions at the wrong time to grow for growth's sake. Those can be reasons for us to exit a position.
Interestingly, you are, of course, a man that doesn't just manage money along with the rest of your team, but you and Melanie Hobson, both on boards, both understanding those management teams, understanding how to guide, to give the outside perspective. You're on Nike, McDonald's, I believe you've been on many more. How hard is it to be a management team? How hard is it to be on a board of directors right now in this environment?
Well, I think being on the boards are great opportunities. I know a lot of people, of course, are in private equity, and of course, all private equity folks sit on lots of boards. Warren Buffett has, talked about how serving on boards makes you a better investor, makes you a better business person. So for us, we learn so much when you're in the boardroom about what a good management team does. How, being on the board of McDonald's when Jim Cantalupo came in as CEO and created a plan to win and was able to get the stock from, really all-time lows to a great recovery. So you get to see great management, you learn more about industries. It's really a great place just to be. I feel privileged to be in the boardroom. To your question about today, I think it's this COVID crisis caused challenges that none of us had ever seen before. So inevitably you have more meetings, you have longer meetings, you're trying to figure out what this is the war, also what the war in Ukraine means for your companies, and how it's going to challenge all different aspects of your financial models. So we are busier. It is a harder time, and these things are so uncertain. We never had seen a global crisis like the COVID in the last, since 100 years ago. And again, this war just came out of nowhere. No one saw what was happening with Russia. And so it is a difficult time, a different type of time.
What do you look at to navigate whether this difficult, uncertain time is being priced into the market? We've got an audience question, for example, asking if you look at the VIX for volatility, the fear gauge, which many feel has been oddly suppressed and not at capitulation levels, not hitting that 40 level. Do you look at that for a gut check on what's now in the market?
We don't look at the VIX, but what we do look at is investors' intelligence to see when there's a lot of pessimism or when there's a lot of optimism. Right now, the numbers are very, very low for optimists in the investor intelligence data. I think only under 25% bulls, which is often, again, a bullish sign when you have that kind of negativity. So there are certain data points we look at from a contrarian standpoint that we help guide our decision making.
Going back to David Einhorn, do you think value investing will come back? Did it never go away? I mean, what did you make of that comment?
Well, it's been such a long 12 years or so.
A bull run, yeah.
Yeah, a few little bright spots, but no, we're still true believers. And you just go back and reread, some of Warren Buffett's greatest comments. You talk to your value managers that are left. I saw Bill Nygren the other day. We talked to Bill Miller and my friend Tom Russo and Staley Cates at Southeastern. All of us sort of feel like we're at this club, even though it's a smaller club than it used to be. But we get together and talk and share ideas, and it's a great way when you can find others who are like minds. I had lunch the other day with the great investor Ralph Wanger from the Acorn Funds, legendary investor, and just to see that quirkiness and his unique insights into the markets. You can talk to great value-oriented people who can think differently than the crowd. It can inspire you and give you that confidence sometimes you need when the markets are unsettled and uncomfortable.
What about the younger generation coming up who haven't lived through 87, or haven't invested through 87, who want to be a legendary value investor? Are you seeing them? Are you managing to have like-minded conversations at the moment? Are we seeing a younger generation being nervous about this market, being put off, having been excited about it within the COVID run-up?
It's harder to find young talent that are true value investors. It's for sure. And it's partly because growth has done so well and people have gotten excited about it. But it's also, of course, everyone has watched how much wealth's been created in private equity. So these things go and the trends come and go. And now everyone's rushing into private equity. Everyone wants to be a multi-billionaire overnight.
They can't be?
Right.
Are you dispelling that myth?
Right. So that makes it harder sometimes to find people, but we find those gems that are out there. We have a dynamic young person that went to the University of Chicago High School, where I went to, who's a Princeton grad like I was, and he's on the South Side here in New York, and he's going to come and join us, and we're just thrilled. It's just, and it's funny. It's one of those great stories where he saw us coming and speaking about investing to the high school. Charlie Bobrinsko and our vice chairman, we go back to our old high school and talk to the students every year. And it's kind of neat to see that, they remember, and then some of them say, yeah, maybe I'd like to be a value investor, and maybe I'd like to work at Ariel someday. And so sometimes volunteering is helpful.
In a way, your patient commitment to certain stocks is almost like loyalty. And you seem to show quite a lot of loyalty in we were talking off stage, you're saying how you'd just been to, the celebration of a life of your old basketball coach when you were basketball captain and varsity captain over at Princeton. Do you see yourself as loyal? Do you think people need to be a little bit more loyal at the moment?
Oh, for sure. I think that is, there's not as much loyalty in our society these days. And again, part of it's this short-term transactional nature. So many of our leaders are looked at as transactional and not people who are sticking to core values over the long term. And that was one of the things I'm so proud of Princeton basketball. Coach Carrill created a way of playing the Princeton offense where people share the ball. They're always thinking about their teammates first. And that's why more than half of the players that played for him came back for the memorial service. And I think it's guided our life after we left Princeton. You want to be engaged and involved and helping others, and good things happen. And I always tell people, I was volunteering for Princeton when I met Melody Hobson, helping to recruit minority students for Princeton. I end up with my most valuable player. And so the sense of teamwork is something I think is important, and loyalty is very important.